Hi, welcome to the Market Alert for Friday, the 22nd of March 2019. So yesterday, another busy day for the pound after May eventually got a deal after a 90-minute meeting with Juncker and Tusk. She was then asked to leave the room, and 4 hours later they came back to her with a new deal. And this brought the pound off the lows, as we can see here in the daily chart, of which we'll look at in more detail in just a moment. So here we've got Brexit delayed, UK gets new deal. That's the main headline overnight, and this is what has brought the pound back to the upside. So let's just have a look at this in more detail. So yesterday the market was sideways. Eventually prices broke through both the 50 and the 20 bar moving average with selling. You can see this here. Then continued to sell, and a bit of buying pressure, a bit of a bounce, and as it went on through the day and through the evening, the pound continued to move lower there. So not a good day for the pound, uncertainty, but you can see how prices have rallied back from yesterday's low, or the overnight low. I'll just draw this across for you. I wouldn't normally do this, but given the situation at the moment, I'm just going to use the intraday just to see how much of a retracement we've got here going on. And as we drag across, you can see that the market is at 62%. There's just heading towards the 76%, which is the 200 bar moving average. So keep an eye on this level, very important level. If prices do manage to move higher or close above this, will add certain momentum to the upside. So keep an eye on that one. News today, nothing of note, even though there's some high impact news items there. It's nothing really that's going to move the market. The only thing that's it's interested at the moment is Brexit and US trade deals. That's the only thing that's really moving the markets. Currencies, Brexit, and trade deals for the stock market. Speaking of which, the Dow up yesterday. Well, I was chatting to a friend in Panama yesterday who's been trading as long as I have, and as soon as the market opened and started to rally, I said to him that I wouldn't be at all surprised if we haven't got the plunge protection to the rescue. And then this morning I see this headline, and again, rescue stocks and the dollar, bonds and bullion not buying it. So if we look at the intraday, you will see, if I just drag this across, you can see there overnight the market's really not buying it at all. It's starting to move lower. But in the pre-market session, the market was lower, continued lower overnight. I'll just drag this over so you can see. There you go. So it started to move lower, as we saw, and then we had a bit of a sell-off mid-morning. The market found support, and if I just grab this from here and we go from the low to this high, you will see the market stopped at 76%. And then we started to move, and then as the market opened, the plunge protection team came to the rescue. Let me just click on this so I can move the chart straight through the 200 bar moving average, and then you can see the rest, as they say, is history, as the market was brought back. However, going back to the daily charts, you can see that the buying certainly didn't outpace the selling from the previous day. And prices showing a slight increase, but nothing compared to the selling the previous day. And now the market struggling at the 76% or the 26,000 level there. So I wouldn't be at all surprised to see this market struggle. If it does attempt to move higher, it's got quite a bit to go to get back to those highs. And the only way it's going to do that is a reduction in interest rates, and also more printing. They would go for interest rates first, reduce those, and also if I can find it, I don't know whether it's in this one, it may be something else that I've spoken about before in the alerts about, the thing is with QE, it was designed really to create inflation to, if you have high inflation, then it will reduce the debt. This is what I'm after. Yeah, so as a major bank capitulates, that's the Fed, this may be time for helicopter money. And helicopter money is making sure that everybody, or basically you circumvent the banks by giving money to the banks. The Federal Reserve or the Bank of England print the money, and it's given directly to the people as a form of income. And this is why the phrase was coined helicopter money. So it'd be like a helicopter. The metaphor obviously is that helicopters flying over, dropping money for the people to spend, and thereby creating the inflation that they really want to try and mitigate this debt and try and dissolve it with rampant prices. That's the idea behind this. So unless that happens, then the Dow is, well, not that, but reduction in interest rates and printing more money, and how they print it and how it's distributed remains to be seen, but that's definitely on the cards. And also, let me just come back to this as well. This is very interesting. At last, a mainstream commentator actually speaking the language that I've spoken for the last 8 years. How weak are prospects for the global economy? Pretty weak if the latest measures announced by the world's two most important central banks are anything to go by. As recently as December, Wall Street was expecting at least 2 more interest rate rises from the Fed this year, and maybe even 3 on Wednesday evening. However, the Fed signaled there will be no rate rises this year. And also, the interesting one here that I've talked about Europe is this. The Fed's dovish statement came 2 weeks after the European Central Bank pressed the button on new measures, chiefly cheap loans for banks, aimed at providing stimulus for the Eurozone's flagging economy. Now, we're 10 years down the line here. We've got 4 trillion plus on the balance sheet in the US, and I don't know how many trillions they've printed in Europe, and there's still negative rates and barely any growth. So we are facing a cliff edge as far as the global debt is concerned. It continues to be increasing daily, and the policymakers, the central banks, continue to look at ways. I mean, we've got, a negative rate here in the ECB, and the economy is not growing. It's staggering, absolutely staggering. This is because they wouldn't allow the banks to go bust in 2008. Those banks should have gone bust. We could have cleaned the system and we're in a different place completely. But this is what you get when you have this elitism in the banking world, where they are not allowed to go bust. It doesn't matter about any other business. And here you see the effects of it. 10 years later, no recovery, just a massive increase in the debt from 65 trillion to 200 trillion. And getting worse by the second. So anyway, that's the only thing that's going to move the Dow up, as I said before, is more stimulus, because really after 10 years of pumping money into the markets with QE, no QE at the moment, where can it go? Also, corporate buybacks going to May, not being able to. They have periods when they're not allowed to do it, so it'll be interesting. That's probably the reason why selling may go away. So it will be interesting to see how that pans out as well. And then finally, Bitcoin still sideways this week. You can see their defined range down during yesterday. The market started to move up, got to over 4,000 again, the psychological level for this market, and then was pummeled back down very quickly as soon as it hit this level. You can see the selling there in the 15-minute chart, and then follow through here until we saw profit taking and the market then coming back where it's been overnight. Okay, that will do it for today. If there is anything to report, I will let you know, but otherwise, as ever, thanks for watching. Have a great weekend and see you in the next one.